Welcome to The Explainer. Today, we're jumping into the future of gold. And let me tell you, it's a story with huge implications for everyone. We're talking about record-breaking prices, governments snapping up gold by the ton, and a direct challenge to the financial system we all live in. This is about so much more than just an investment. It's about a massive shift in the global economy. Okay, so here's the game plan. We're going to start with some absolutely eye-popping price predictions. Then we'll dig into who's really behind this gold rush. From there, we'll connect the dots to a major geopolitical game that's playing out, look at the perfect storm of factors driving this whole thing, and finally, we'll step back and ask the really big question. Are we watching the dawn of a totally new monetary era? Let's get right into it. So what is going on with gold? Well, it's not just climbing, it's smashing records. And what's really wild is that for the first time in a long, long time, the biggest banks in the world are all pretty much on the same page about where it's going next. Let's just start with a number that'll make you sit up and listen. Over $5,000 an ounce. And no, this isn't some fringe prediction from the internet. This is the average price target for late 2026 from one of the biggest names on Wall Street, J.P. Morgan. In fact, they've called gold their highest conviction long-term bet. And get this, J.P. Morgan is not alone, not even close. What's so incredible here is the sheer consensus. You've got Bank of America, HSBC, Goldman Sachs, Societe Generale, they're all pointing to that same $5,000 neighborhood. Now, in finance, analysts are paid to disagree. So when you see them all singing from the same hymn sheet like this, it tells you something really, really big is happening. This isn't just a bull market, it's a seismic shift. Okay, so a consensus like that from Wall Street, it just begs the question, right? What in the world is going on behind the scenes to fuel this kind of historic rally? Well, the answer reveals a massive, structural change in how the world works. It's not regular investors piling into ETFs, and it's not hedge funds trying to make a quick buck. The single biggest driver, the force creating what experts are calling a price floor for gold, is a much, much more powerful group of players. And this slide, wow, this tells the whole story. It's the world's central banks. I mean, just look at this chart. For over a decade, their buying was pretty steady, kind of boring. But in the last couple of years, as you can see, it has gone absolutely parabolic. They've become this huge price-insensitive buyer in the market, meaning they're buying no matter the cost. And nobody expects that to stop anytime soon. So why the sudden shopping spree? Well, the key thing to understand is this isn't just an investment for them. It's a strategic move away from a world dominated by the US dollar. It's a movement people call de-dollarization. Countries are desperately looking for assets that can't be frozen or sanctioned, assets that are outside any single country's political control. And gold? It's the ultimate neutral, debt-free asset that offers stability in a world that feels more unstable by the day. But these central banks aren't just acting on their own. Nope. This gold buying is a critical piece of a much larger, coordinated strategy, one that's designed to build a whole parallel financial system. Let's take a look. And this right here is the centerpiece of their entire strategy. They're calling it the unit. It's a new way to settle international trade. But here's the kicker. Unlike other currencies, its value is directly anchored to a physical weight of gold. This is a direct shot at the US dollar's role as the world's go-to currency. And this isn't just wishful thinking. As this slide shows, it is a clear four-step plan. Step 1, buy up massive amounts of physical gold, which, as we've seen, is exactly what they're doing. Step 2, launch their unit pilot program to test it out in the real world. Step 3, build their own plumbing, their own financial infrastructure like BRICS Pay, so they don't have to use Western systems. And the endgame, step 4, challenge the dollar's dominance by creating a real, viable alternative. So you've got this massive strategic buying from government. And on top of that, you have what you can only call a perfect financial storm brewing, adding even more fuel to the fire. Let's break down this storm. First, everyone expects the US Federal Reserve to cut interest rates, which makes gold look a lot more attractive than bonds. Second, a weaker dollar makes gold cheaper for anyone buying with other currencies. Third, you have soaring US government debt, which fuels what's called a debasement trade, basically a bet that the dollar's buying power is going to go down over time because of all this debt. And finally, in a world full of conflict, gold's ancient role as a safe haven is more important than ever. Okay, so with all these powerful forces lining up, is the path to $5,000 a sure thing? Is it inevitable? Well, like with any big forecast, there are always two sides to the story. Let's look at the arguments for and against. The bull case is pretty clear. The big shifts we've talked about are here to stay. Central bank buying is a long-term strategic realignment. But there's always a but, right? The bear case really hinges on a few things. If the economy stays stronger than expected, the Fed might have to keep interest rates higher for longer. That would make boring old government bonds, which pay you interest, look a lot better than gold, which doesn't. Also, if central bank buying suddenly cooled off, that would take a huge buyer out of the market. It's a classic tug of war. To get another clue about how strong this trend really is, we can look at gold's relationship with its little sister, silver. The gold to silver ratio, it's a powerful indicator that kind of gives us a peek into the overall mood for precious metals. So what you're seeing on this chart is that the ratio has been dropping fast. Now, why does that matter? Well, historically, in big precious metals bull markets, silver tends to dramatically outperform gold as the rally really gets going. So when you see silver starting to catch fire like it is now, a lot of analysts see that as a massive, flashing green light, a powerful confirmation that this rally is the real deal, and it still has a long way to run. It's a very bullish sign. Okay, let's just step back for a second and think about the final, most important point of this whole story. Because this isn't just about charts and prices. It's about a fundamental rethink of what money even is. This quote from Market Analysis just nails it. When you see this kind of consensus from the world's biggest banks and this level of strategic, long-term buying from central banks, you realize the game has completely changed. Gold is moving from the fringes of finance right to the very center. And that leaves us with the one question that really matters. Are we just watching another bull market in a commodity, or is this global rush to hoard gold actually signaling something much, much bigger? The slow-motion birth of a new financial order, one where the world is actively creating an alternative to the system we've known for decades. That's the real story behind gold's incredible run.